Becoming a millionaire used to sound so far-fetched and practically impossible for the everyday American to achieve. But the reality is, most of you guys can become millionaires through boring, consistent investing, and I'm going to show you how. In this video, I want to walk you through an example of how investing just $20 a day can realistically turn into over $1 million through time and compounding interest in the market. This video is meant to show you what's actually possible if you start partaking in long-term investing. $20 a day doesn't sound like much. It's probably a couple coffees. It used to be 20 McChickens, but now even those are getting expensive. $20 a day really just isn't that much money. However, $20 a day over the course of a month adds up to about $600 a month. And then you put that into a year's perspective, that's $7,300 a year. So we're going to use that $7,300 number for the compounding interest examples I'm going to show later in this video. And the important thing to understand is that wealth isn't built by how much you invest all at once. It's built by how long you invest consistently, because time is the biggest variable to building your wealth. If you invest $7,300 into an ETF like VU, which tracks the S&P 500 and earn an average annual return of about 10%, which is what the S&P 500 has historically returned every year, the growth becomes significant over time. After 10 years, you're going to start to see some progress, but not necessarily feel set. But after 30 years, you're going to be amazed at just how much your money is working for you. So let's jump into the examples here. If you throw $7,300 a year into the compound interest calculator for a 30-year window at a 10% return, you get $1,184,000. You're literally a millionaire with $20 invested a day for 30 years. That is a shit ton of money for just literally investing $20 a day. And that proves that anybody can be a millionaire by just investing and having a long time for your money to compound. Now, if you want to adjust for inflation and figure out how much purchasing power you would have in today's dollars, using the exact same metrics of $7,300 invested a year for 30 years, but this time getting 7% return, adjusting for inflation, that would put you at roughly $680,000 in today's dollars for your purchasing power in the future. And for those people that are going to say, well, $680,000 just doesn't seem like a lot of money to retire off of. Well, those people are correct. I don't think that $680,000 adjusted for inflation would not be enough to retire and live off of. But I just wanted to show this example of a very cut and dry investing strategy of just $20 a day and show you the power of compound interest over a long period of time. I would highly recommend that you do eventually invest more than $600 a month, but $20 for most people just seems like a good starting point, and it's something that I think a lot of people can simply achieve right now. Look at how easy it is to build wealth if you just start investing early and stay consistently through the thick and thin of it, through the ups and downs of the market. Most people underestimate how powerful time is in the market and overestimate how much effort is required up front. Now, the next thing that I'm going to show you in this video is why investing in VU, the S&P 500 ETF, is going to make your life a whole lot easier than trying to pick individual stocks, and why specifically I choose VU for this example. The reason investing in something like VU makes life easier is just because it removes decision fatigue. When you buy individual stocks, you're consistently making judgment calls. You're going to be consistently having to determine what to buy it, when to sell, all that nonsense. Me personally, I don't have the time to be doing all that research into individual companies. Most of my day is spent actually working my 9-to-5 engineering job, and I just want to pick the simplest and most proven investments. That mental overhead of trying to decide the stock winners and losers is going to add up. And over time, it increases the chances that emotion will creep into your investment decisions. Investing in something like VU simplifies all of that. You're not betting on one company to be right. You're betting on the overall growth of the largest and most successful companies in the United States economy. You're essentially betting on the U.S. economy to perform in the long run. That's a much more forgiving strategy over long periods of time. And I can already hear the naysayers in the comments like, oh, Brent, what if the U.S. economy totally collapses and our dollar collapses and completely loses value? Well, then I would recommend diversifying some of your investments into, let's say, gold, silver, cryptocurrencies. There's a ton of different ways you could bring peace of mind with this. You don't have to have everything in the S&P 500, but I'm just using that for the example of this video. Honestly, if the US economy has a catastrophic collapse, we would be facing a much bigger problem than just the money in the stock market. And I wouldn't recommend this strategy to someone who's close to retirement or needs to live off of their money. If you are needing to live off this portfolio soon, investing in VU might actually be a higher risk bet for you because of just what I mentioned above. You could have a 5 to 10 year recession that we don't know is coming, and you need to live off that money. This video is tailored to those people that have a lot of time to be able to compound in the market. If you need to live off your portfolio soon, then I would recommend looking at value stocks, bonds, high yield savings accounts, etc. But most of you listening to this video are not in that situation. Another reason I specifically like VU is because of its built-in diversification. When you buy VU, you're instantly getting exposure to over 500 of the largest companies across multiple sectors: technology, healthcare, finance, consumer goods, etc. That means you're not overly dependent on one industry or one CEO making the right decisions. If one company underperforms, it's diluted by hundreds of other companies. This dramatically reduces the risk compared to owning a handful of individual stocks, especially if you don't want to spend hours analyzing earnings reports, balance sheets, and just keeping up how the company is doing. And finally, VU is extremely low cost and tax efficient, which matters more than most people realize. The expense ratio of VU is tiny, meaning more of your money stays invested and compounding over time instead of being eaten up by fees. You're not trying to outsmart the market, you're letting the market work for you, which is often the smarter move and more sustainable approach. Most investment firms can't even outperform the S&P 500 over a 10-year window anyway. Becoming a millionaire this way is not exciting. It won't make for viral headlines, but it works. And it's going to work quietly in the background of your life while you focus on building your career, your skill set, and your life. Wealth built this way is durable because it's not dependent on luck by any means. It's dependent on your investing behavior and just being disciplined. $20 a day feels insignificant in the moment, but over decades it becomes life-changing. The only requirement is that you don't quit. You just keep this consistently going for a long time horizon. There's a lot of different avenues to reach $1 million net worth, but I would argue compound interest is the easiest way to do so. There's other paths to $1 million. Maybe you get lucky and invest in some cryptocurrency that 100x's overnight, but the odds of that are low. And for every person that says they got rich that way, there's 99 other people that lost a lot of money. You could go become a brain surgeon and make $1 million a year that way. However, you got to do all that schooling and residency before you even make a decent paycheck. Plus, you'll have hundreds of thousands in student loan debt. Or you could hit the genetic lottery and become a professional sports player. My point here is that long-term investing is available to the everyday person, and you can really set yourself ahead if you prioritize finances earlier in your career. If you're watching this and thinking it's too late, it's not. If you're thinking this is too boring, well, that's kind of the point here. Boring, consistent investing is what actually works. Start where you are. Automate it, increase your investments over time, and let compounding interest do its job. Now, if this video helped put investing into perspective for you, let me know in the comments when you start investing and how much you're aiming to invest daily, or monthly, or yearly. If you want more content like this focused on realistic wealth building, discipline, and long-term investing, consider subscribing to the channel. I'll see you guys in the next one.